Teladoc has the opportunity to disrupt the healthcare space and be the winner-take-most in the telemedicine or virtual care space. I've encountered this company because ARK Invest has a huge position in it, one of its top holdings. And this might be one of the most interesting companies that I've analyzed so far. Teladoc not only offers telehealth solutions, but since its acquisition of Livongo, it offers solutions in the diabetics space. It is the biggest company in this space and is very well positioned to capitalize in the growing telehealth and telemedicine space. Healthcare is a multi-trillion-dollar market and is one of the last markets to be disrupted by technology. It is notoriously hard to disrupt this space given misaligned incentives. Today, the United States spends around 16% of its GDP into healthcare and is one of the countries that spends the most amount of money in it and see the least amount of results. The current COVID crisis showed its inefficiencies and it opened the door for solutions like Teladoc. Providers who were opposed to telehealth and telemedicine quickly became its biggest champions, and regulators follow suit, enacting a number of regulatory changes that help telehealth and telemedicine. Consumer adoption of telehealth tripled from 2019 to 2020 from 11% to 48%. And Frost & Sullivan predicts that the telehealth industry will grow at 38% year over year in the next 5 years. Just as brick and mortar retailers are realizing the importance of an e-commerce solution, so are traditional health systems. And that's where Teladoc fits in. They offer a white label solution for these providers so they can take advantage of Teladoc additional provider supply and still have control of their brand. One of the biggest changes in this market is that CMS, the Center of Medicare and Medicare System, added new changes to reimburse telemedicine visits at the same rate as they reimburse office visits. The largest barrier to telemedicine adoption was just removed this year. That's amazing news for Teladoc. So where does Livongo fit in this puzzle? Livongo offers 4 products. Livongo for diabetes, hypertension, for pre-diabetes and weight management. Livongo has a SaaS type of business where they charge patients month by month in multi-year contracts. Compared to Teladoc, Livongo has higher gross margins, a very sticky product, and a wide moat because its hardware devices and patient data need to be FDA approved. However, Livongo was a really tough sell before joining Teladoc because providers didn't have the same incentive as patients, like controlling costs. And before the pandemic, remote monitoring was an afterthought, with only 32% of the providers making that investment. Now in the pandemic, it became a necessity and 92% of the providers are making that investment. That's a sea change. Add that to the fact that CMS is creating CPT codes for remote monitoring in a bid to spur adoption. With Teladoc existing footprint in the healthcare space, it will help Livongo cross-sell to its clients. On the Teladoc side, Livongo will help Teladoc have higher gross margins, a stickier product, and it will confer a competitive advantage against competitors like Amwell that only offer telehealth solutions. So even though Teladoc had around 51 million patients, it was hard to monetize them before the Livongo acquisition. So even though Teladoc US membership was around 51 million members, they could hardly monetize them. With Livongo acquisition, they can better monetize their users, charging around $75 per member per month for diabetes treatment, $35 per member per month for pre-diabetes and hypertension treatments. And the Livongo division will get access to a lot of members and a much faster go-to-market team, since they only have 25% client overlap. That's a huge opportunity for cross-selling. Let's look at their financials. The combined entity trades at 32 times this year's revenue and 19 times next year's expected revenue. They generated around $1 billion of revenue this year with gross margins of 67% and EBITDA margins of 8%. They expect 30% cumulative annualized growth rate in the next 3 years. Teladoc trades at a 40% discount compared to its next competitor, Amwell. That's a huge discount. And now with Livongo, Teladoc will show higher gross margins and a stickier product. Let's take a look at its risks. One of its biggest risks is that after the pandemic goes away, Teladoc growth might stagnate or even go down, since a lot of people might decide to go to their doctors in person. But again, telehealth is very convenient, and so a lot of consumers that were introduced to this tool might keep using in the future. The Teladoc-Livongo merger created the single biggest telehealth provider in the world, and together they formed the category leader in a huge market of $120 billion of total addressable market. Teladoc has all the pieces together to be the leader in the telehealth space. I hope you guys like this video. If you have any comments, leave it down below. Thank you. Bye.